Welcome to the great game. Welcome to the machine. How many of you think the stock market is live or insentient? I don't. Remember this? There was this paper that came out a while back called "Is the Internet Conscious?" Thought it was really thought-provoking. As we close in on AI and the singularity and AGI and stuff like that, can distributed systems be conscious? Right now, we're asking if a bunch of weights can be conscious, which seems very unlikely. Anyway, shall we look at some stocks? We shall. I'm also going to eat while we do that. Hope you're okay with that. Hi everyone. Hi Maria. Maria Shkreli. We're probably related. I wonder. Could we be related? You never know. I met somebody the other day who is a cousin of mine at a restaurant. They said, "Oh, I'm your cousin." I said, "Oh, that's nice." Go figure, huh? Oh yeah, I wanted to look at Merck KGaA. This is German Merck. This is not the US Merck. Totally different. They actually started off as the same company, but then when World War II happened, I think America basically just said, you know what? We're taking Merck. That's ours. You guys keep what you got out there, but anything you did in America, that's us. Hey, sparsentan. FDA approved. Good for sparsentan. Merck KGaA is quite a bit different from Merck US. And I wonder what KGaA is, because it's usually AJ, which is Onkelstoft. So let's see what the abbreviation means, because I don't know. German Partnership Limited by Shares, Kommandit Gesellschaft. So it's like a company, but limited by shares is the Kommandit Gesellschaft of Aktien. I think Gesellschaft basically just means company or business entity. I guess it means social... Gesellschaft. Social relations based on impersonal ties as due to a society or organization. Gesellschaft. I heard it might snow. Do your ears hurt? Sorry. I have tinnitus, so... So I guess we have our annual report on March 2nd, so it's a couple days from now. In the meantime, we have the Q3. Yeah, I'll do some more finance courses. Finance and investing are slightly different things. Finance can be a pretty dry academic subject. Investing is not that dry, but it's not that academic. Finance is a field of study. Investing is more of a craft. Guess I'll shaft. Okay. And then there's gambling. Godell's see if I can delete that message. Don't know how to use Twitch. We can get you an invite to the Godell data. Let's delete that message. All right. I think I deleted it. Ten push-ups. All right, so what's up, Jaw? Sheboygan, Wisconsin. It's an actual place. I do specialize in endocrinology and rare diseases, genetic rare diseases. So I have some expertise there. I also have some expertise in psychiatry. I used to not have a lot of expertise in oncology, but I go back and forth on oncology. No chess right now, maybe tonight. VNAND, vertical flash memory. Parasupernuclear palsy, PSP. I know a bit about that disease. A lot of the brain protein diseases are hard to treat. We're actually working on news this week, so we have a news vendor. We have a lot of news vendors. And so stay tuned. Thanks for the question, Rob. If I had to pick a programming related job, it depends on what kind of programming you like to do. for front end, I would certainly be a web developer. For back end, I'd just learn all the databases I could. But those are only two areas. There's a lot more than that. Don't know much about Enver Hoxha, sorry. I think he died a long time ago. I don't think there's an AI bubble coming as much as, how should I put it? An AI thought bubble, maybe, but probably not an AI stock bubble. There are a lot of Ebola vaccines in the works. Kind of a public health question there. Can I teach you options? Sure. I should probably do a whole options course. People ask about options a lot. I think you should avoid options, to be fair. There's more and more options now, like daily options, that are toxic. If you guys want me to trade them like a monkey, I will. If you think that'd be funny, I can trade them, and you can see how some people try to turn $1,000 to $10,000 on the 0-date expiry. But I'm not any better at that than anybody else. I do use options to speculate sometimes, but not often. But yeah, if you want to see me try to monkey my way to $1 million from $5,000, it's going to end up the same way everybody else's ends up, which is losing all of it. So I don't believe in that. I don't think you should do it. I definitely don't think I should do it. It would be funny, it'd be entertaining, but I'm not here to entertain anybody or have fun. I'm here to do what I do normally, and if you enjoy watching it, then that's good on you, but if you don't, I suggest you go do something else, very politely. In the past, I would tell you something different, a little more aggressively, but I'm a changed man. I've been rehabilitated. There's a lot of books you can read about options. There's a famous book in particular. I wouldn't say that I hate anybody here. I just being honest with you. I enjoy the community, of course, but I'd be lying to you if I told you that, I'm going to do whatever you guys want or something like that. Oh, I got Grand Theft Auto to work, so that could be a total blast. Maybe we'll play that tonight if we get bored or... It's odd. Oh, I would definitely be role-playing. NASDAQ Capital? NASDAQ's live. Anyway, too many questions. Let me focus. Looks like there's this other... Maybe I should put it in here. I don't know. Maybe ChatGPT will be able to value stocks. That's a good question. Okay, so this is one time. Okay, good. Yeah, no, if you have any stocks that don't work on Godel, definitely feel free to ping me on Godel or anywhere else. Some of these really small cap stocks I don't always have loaded in, but that'll all be fixed shortly. I think we got 99.9% of stocks by market cap, but only about 70% stocks by listings. So I have to go fix that shortly. I don't know if investing will ever be futile, but yeah, no, it's a good question. If you could program a fundamental analyst or a team of fundamental analysts, you would basically wring out all of the inefficiencies out of the market, wouldn't you? We got to leave old Shkreli back in prison, you know, retire old Shkreli. You don't want to bring him out again. He's not a good guy. He is not a good guy at all. I'm just kidding. They call it pre here instead of adjusted. We call it adjusted or non-GAAP. They call it pre sometimes in Europe. Learn these crazy things. It's IFRS. This is EBITDA pre. That's pre-reality setting in. Something you learn in jail that you could only learn in jail. I don't think so. Federal Trade Commission will lose in appeals cases and so forth. I'm not worried about them. They always lose. They lost a big case against Meta. They tried to stop Meta from making some tiny acquisition and they lost. I think the Wall Street Journal had this great story. Lena Khan chalks up another defeat. Oh wow, why I'm resigning as FTC commissioner. Lena Khan's disregard for the rule of law and due process make it impossible for me to continue serving. Woof. They tried to buy this small company called Within, and the FTC tried to stop them, and then they lost. Yeah, it's a slam dunk. The many abuses of Lena Khan's FTC. Why is the Wall Street Journal letting her write in the Wall Street Journal? All they do is shit on her. I think there's a editorial that says, "Does the FTC ever win?" Well, I guess against me they won, but that's only at the district court. So we'll see how the appeals court goes. Second Circuit. All right, let's see here. Equity. That's a weird line item. Where's Goodwill? Oh, if vol is expensive, you should sell vol, but, you know, how many people know if vol is expensive or not expensive? How do you forecast that on a near-term basis? That sounds awfully difficult. All right, what am I missing here? I'm adding something up over and over again, it appears. Let's see. Oh, no, I got it about right. I see. I'm too busy talking to you guys. I'm missing something right in front of my face. Who's done? I don't know who Dunn is. Is that a football player or a rock star? Billy Dunn. Oh, at the FDA. I was like wondering, are you talking about the FDA guy? Well, these FDA staffers come and go. I mean, I had mixed interactions with Dunn, as did my team. I'm not sure he'll be missed. Focus on your assignments more? Well, I think you have to close your eyes and ask yourself, do I want to be successful? And if the answer is no, then do whatever you want. But if the answer is yes, you have to take your assignments seriously and get to work and stop being lazy. You have to trust in the syllogism that is your future. If I work hard, then I will be successful. And if I'm successful, then I will achieve my goals. If you don't trust in every piece of that syllogism, you will fail. So the reason that you're not working hard is because you have lost faith in the syllogism. You either don't think that you will you either don't believe that if you work hard you'll be successful, or you don't believe that if you'll be successful that it's worth it, because you may or may not be happy, even if you do become successful. But most people have a problem with the first part of the syllogism, that they don't trust that if they work hard that they'll actually be successful. So what you have to do, I think, is self-actualize and imagine being successful. What does that look like and feel like? And then work backwards to doing the little thing you don't want to do, like making your bed or whatever the case is. All right, let me see here. Are these in euros? Yes. Yes. 11 billion in debt. Okay, so Merck KGaA is slowly working off all the debt that they accrued from Millipore and the other deals they've done over the years. Cash flow. About $1.25 billion in cash flow. Not a cheap stock. 87 billion euro enterprise value, 4 or 5 billion cash flow. They do have some growth coming from life sciences, but I wonder if some of that growth is COVID related, and well, they should have lapped that by now, I suppose. The pharma business is growing. Where's that growth coming from? It can't be coming from Erbitux. That's such an old, crusty product. Glucophage is literally metformin. Rebif is an old, tired product too. Mavenclad, I guess, is doing okay, but that drug will go generic too. I can't believe anybody likes that product. It's just such a tired, shitty portfolio. I guess Bavencio is just a Me Too PD-1, but is that really going to grow that much? Yeah, it's kind of a tired, crap portfolio, if you ask me. The life sciences and electronic stuff is pretty good, but so would you pay 17-ish times for? It's not horrible, I guess. The diversity comes in handy. You have a drug business, a life sciences research business, and even a electronics, a liquid crystal display business. Really nice, diverse business there. I like businesses like that because they're basically indestructible. But the markets don't like businesses like that because they view them as too distracted. And while it's true that management focus tends to drop when you have several different divisions in one company, if it's well managed, it can really be beneficial. But that's generally the criticism of such businesses. And that's why even Johnson & Johnson, who had been maybe the one company who had been unwilling to buck the trend of de-merging, decided to split off their consumer business. Here's the consolidated cash flow, which includes this CapEx. So I wasn't including the CapEx in some of my numbers earlier, so $1 billion in CapEx, only about $2 billion in free cash flow for those 9 months, so it doesn't look like a particularly exciting stock. In fact, probably an okay short. I remember when they got this drug, berzosertib. Sounds like bozosertib. Berzosertib, ATR inhibitor. This was from Vertex. So I'm actually going to go look at that ATR section because I think a lot of other companies are still pursuing ATR inhibitors. Just because one company fails does not mean that the other companies will fail too. But it's certainly not a good sign if, depends on why it failed, right? But it's generally not a good sign if somebody else is trying to make a mousetrap and you're trying to make a similar mousetrap and they say, oh, our mousetrap doesn't work. You're not usually happy when you hear that, right? You'd say, oh man, maybe our mousetrap won't work either. And the thing about pharma is you can't adjust your mousetrap, right? You can't adjust your mousetrap halfway while you're making it. You set it and forget it is the point of pharma. You really can't change it. So 184 euros. So Merck KGaA is the number 14th biggest drug company by market cap, according to my list here. All right. I'm going to update my oncology sheet for that ATR inhibitor. I won't be coming to Spain soon. I do like Interactive Brokers a lot. I don't think Pfizer is getting a great deal. at all. I think they're just using capacity. Right, so I don't have this sheet 2 filled out, but add a couple. Go back to this list. What's Erbitux's name? Cetuximab, right? Remember ImClone? Oh man, Raptiva's been discontinued. It's too dangerous. And then we have Bavencio. Does anybody know Bavencio's generic name? What is it? Pfizer and Merck KGaA's Bavencio. Avelumab? Berzosertib. Okay, so I just got to remember to keep updating this oncology sheet every now and then. Let's see what else. BioNTech. These are the guys that brought you the Pfizer vaccine. I don't have much going on in this model, but let's see if we can update it. I think I must have these years backwards, so I have to fix that too. I wouldn't trust Seeking Alpha A+, I don't know what that is, but that doesn't sound good. Jackson Financial, looks like some kind of bank maybe. I don't really follow bank stocks, sorry. I don't know about an investing guideline. Like, investing is very difficult. I don't know if there was an easy way to do it or a guideline, that'd be nice, but it's really, really difficult. All right, so let's see. So this is BioNTech. This company became very big and very successful with their COVID vaccine. So they acquired this company, InstaDeep. I never heard of these guys. I'm kind of interested in this AI software type of thing for pharma. $360 million, not bad. Really interesting. I want to send this to a couple friends of mine. All right. German Chancellor Olaf Scholz to visit BioNTech. Hope he had a good visit, Mr. Scholz. Malaria vaccine. Oh, cool. That wouldn't be a big commercial winner, but be a medium one for sure, and it'd be a huge win for all global health. Prophylactic herpes vaccine. That'd be great. That'd be a really big product. I didn't know they had a herpes vaccine. HSV2. Herpes is a major healthcare problem. All right, so there's the Q3 results. I think I have these. I just labeled them wrong. Total revenue is 3.4 billion. That looks right. Okay, so I just labeled these the wrong year. All right, that's better. So revenue is dropping pretty drastically and quickly for BioNTech due to the COVID vaccine revenue kind of plummeting. COVID seems to have run its course. Thank God. But they still made $2 billion last quarter, so. They have $13 billion in, I guess, euros in cash. Oof. Unbelievable. $7 billion in accounts receivable. I don't know, maybe these governments should ask for their money back. I'm just kidding. I actually am a fan of the vaccine, but I do think it is a little bit funny to see that they're still owed $7 billion. I wonder if some of their customers, some of these smaller countries may say, yeah, well, you know. I'm not paying. How about that? Oh, there's plenty of shorts out there. Don't worry about that. We'll get some shorts. Don't worry. The Shkreli short train is coming soon to a stop near you. We'll print you some money. I gave you guys Liquidia, LQDA. I don't hear any thank yous. I got some thank yous in the emails and the DMs, but I don't hear any thank yous. That was my first and only stock pick since leaving prison. But NTLA is my second one. So if you haven't looked at NTLA, maybe take a look. Deferred tax assets, deferred expenses, other right of use assets, so stupid. PP&E and intangibles. Other financials. Okay, there we go. It's amazing. BioNTech has a total plant base of 500 million, and they made 2 billion last quarter selling this COVID vaccine. What a business. What a business. I know some of you are skeptical about the COVID vaccine, so that might make you guys mad. But that's the nature of the business. Vaccines are very tough, they're very tricky products in general. They're not quite the same evidence that we get with other medicine. I think that's kind of like a bit of a misunderstanding. ALVO, I think I have it on my list. I have not made a model. I'm very busy mostly writing software, so. A write-off? Well, it's funny, write-offs come in different ways. There's charge-offs that exist with GAAP, and usually we eliminate them in non-GAAP. But then there's other kinds of write-offs. This is like advanced finance, but like you could argue most of what Amazon does in their business is a write-off. Not a write-off like a tax write-off, but mainly, basically a charge against the real operating profits. It's a little bit complicated to go through, but government grants. So weird. Where do I put that? I'm just going to put it in other. No, my colleagues write the drug-like code base. I write a code base for Godel, or I help at least. So that's what I help program. Godel is this fancy stock market app you see in my background here. We're also making a lot of cool new features like our own Excel, our own Excel plugin if you want to still use Excel, but hopefully replace Excel for financial uses. It's getting a little tired. Microsoft doesn't love us. There is a free version, of course, yeah. There's no such thing as a pleb. It's just somebody who's aspiring or will soon become wealthy. Okay, 1387. Okay. At least in my book. Yeah, Excel's difficult to replace, but you'd be surprised at how many companies have replaced it internally with their own systems due to its limitations. Temporarily embarrassed millionaire, I like that. Temporarily illiquid. Ticker tape. Let's see this trash. Ticker tape. Ticker tape. All right, what is this? This is for buying gold. What the hell? Oh, this is for Indian stocks? This is so confusing. Futuristic stock screener, really? Let's see. These are all Indian stocks. PE ratio? Really? That's it? That's the futuristic? You should take a look at this company called Bloomberg. They have they got something a little bit better than this. A little bit better. And then there's another one called FinViz, which is pretty good too for screening. But yeah, this is not very sophisticated. This is very limited. I will not be returning to that website. I'm not even going to write it down. No, I mean Bloomberg works on Indian stocks. It's just $2,500 a month. That's a lot of rupees. Indian stocks are just because the one Adani guy might be a scammer, and I don't even know what the story is, by the way. Doesn't mean that all Indian stocks are bad or something. That'd be like saying all American stocks are bad because of Sam Bankman or something, or WorldCom. I like India. The country, the people. I mean, it's hard to like people generically, right? But Indian Americans have done very well. How about Vivek Ramaswamy, or Vivek Ramaswamy? Would be great to have a brown president, as likes to use that word brown. I don't know why we have to just blanket color people. Brown, black. That's not even the color. There's like 3 different melanin pigments, right? There's like eumelanin. What's funny about eumelanin is eu in Greek means good. So this is the good melanin. This is the kind of melanin I have, pheomelanin. I want the good one. Just joking aside, you can see these hydroxyl functional groups. Do you know what this is called? Anybody? Yeah, we should just use hex color codes if we really want. It's a quinone. They're just hexagons to you? Me too. Stop. Science. Immediately stop. I don't want to do any science. God damn it. How many shares outstanding do these guys have? That's all I really want to know. Does BioNTech make normal SEC filings? I don't think so. They have 6 Ks. This is the report of a foreign issuer. Okay, this is a news release. This is their annual report. What a pain in the ass. So what's going to happen to the COVID vaccine revenue? It's basically going to go to zero, if in my opinion. But if you look at what Pfizer said on their conference call, they actually are saying that it's going to go down this year, but up next year. Can you believe that? So 2024 and 2025, COVID vaccine revenue is going to go up. That doesn't seem possible to me. Unless they know something we don't know. More COVID coming? Yeah, it seems cuckoo for Cocoa Puffs. I think you should be able to look up the shares outstanding of any company at any time without having to look through company filings. I think there should just be companies mandated to put a running count of all shares outstanding. What do you guys think? Oh, Ryvu is on the Warsaw Stock Exchange. That is so cool. Huh, look at that. These are the Polish zloty. How much is zloty to $1? Do you guys know? This company's worth $1 billion zloty. It's 0.22, so it's 5 zloty to $1. So this is a 200 million market cap. Pretty impressive, huh? I don't go see tennis too often. AMC is not going to the moon, no. I'm sorry. I wish it would for anybody who's long's sake. I wish AMC would go to the moon. But no, I know that Bloomberg does give you some, but I've corrected Bloomberg before on shares outstanding. And a lot of times they make mistakes because like there isn't a new statutory filing, but they'll say that the date is more recent or something like that. Well, lawsuit's just a lawsuit. Lawsuit's not that big of a deal. The plaintiffs bar, as they're called, file stockholder lawsuits every day, all the time. They just find one little old lady, no offense to any little old ladies. They find a little old lady who has 100 shares, and then they form a class around her, and like, I don't know what these people, why they do this thing, but it's a ridiculous process. I actually think the ape situation was kind of fancy footwork for a CEO that had quite a lot of issues, right, with a crazy shareholder base that demanded a lot of things that he couldn't deliver. They demanded no dilution, even though the company had no cash. So ape allowed him to sort of do the dilution and give them kind of a meme at the same time. So like, he sort of had the impossible job of pleasing like a million idiots. Okay, so here's the last statutory report BioNTech put out. I don't think watching what Jim Chanos does is really valuable. The guy's kind of had a pretty mediocre track record. Most guys on Wall Street don't respect him that much. I don't think Kamath is very good at investing. He's a pretty smart guy, obviously, but the whole SPAC thing is pretty ugly. Burry's also kind of one of these people that mass market pays attention to way more than the actual Wall Street doesn't care about Michael Burry. So I get asked about him every day, so I guess he's some kind of celebrity. But it's not like he runs a big fund or anything. There's like 200 people at .72 that manage more money than Michael Burry. He just likes to talk, a lot, which a lot of Wall Street doesn't like to do. So that's why people listen to Michael Burry. If you had people who actually would talk more, then you'd have a lot more interesting people out there. I use ChatGPT for a lot of things, but not for fundamental analysis. Burry does not have an amazing track record. Let's see, Michael Burry annual returns. Looks like he didn't make any money for 5 years there. But what is this? This is a 13F tracker. This doesn't tell us anything. We need his private returns. This is 2000. This is a while back. I guess he restarted. What is this, Buryology? You gotta be kidding me. %29 KGaA. I don't know, I'd be curious what the last 5 or 6 years would be. Doesn't appear easy to find. I'm not saying he's a bad fund manager or something like that. I'm just saying, like, the amount of attention paid to him versus other investors on Wall Street is unwarranted. So he had an 8-year run. That was an interesting time for managing a hedge fund. And then did he open it back up? Looks like he was short Tesla, which I guess he was wrong about. Whoops. So does he have outside money? Oh, he did reopen the fund. Okay, 2013. So yeah, I don't know what his returns were in the last 5 or 6 years or whatever. But yeah, there's a lot more interesting people to follow. But you guys would never have heard of them on Wall Street. Do you want me to tell you about a few of them? Should I do that? I can't break my omerta, my oath of silence, and give up some of my secrets. Oh man. I'm friends with a lot of these people. Shoot. Well, let me look at this. I made this sheet, and this is on my GitHub. So this is by Q3, although Valentine's Day passed, so Q4 is out now. Let's take a look at Citadel. This is Q4 AUM. So you got to keep in mind that there are people at Citadel that manage more, just working at Citadel, they manage 10 times more than Burry ever has, and they have better track records. Just think about that, right? You got a fund like this, they've got 200, 300 different pods, right? And those pods are just slivers of capital that traders at Citadel trade. Now, it's not only fundamental stock jocks like Burry or macro jocks or whatever, but it's also people, it's also quantitative investors. So it's a mix of different types of investors and different types of strategies. So it's a very diverse pool of investors, which is why they're so successful. You can see that their portfolio includes virtually every stock in the stock market from A to Z. They're either long or short. And you could have one portfolio, you could have John that's long one of these stocks, 10x Genomics, and in the same firm, you could have Henry who's short it or long it. You know, they take different sides. And so the firm itself is actually not even long or short that stock. So, you know, it's a very kind of convoluted system, these so-called pod shops. There are kind of 4 big pod shops. You've got Citadel, Millennium, Balyasny, and Point 72. Those are the 4 big pod shops. And, you know, at those pod shops, there are people who have track records that you wouldn't believe. Now, a lot of times people say, why don't you start your own fund? I'll give you an example. This guy, Samlin, most people have never heard of. That's somebody that worked at one of those 4 pod shops. You can go do the research. And he was very, very good left, and now he has his own hedge fund. But I think that this person could easily be managing more than they're managing now at their own firm if they stayed at the pod shop they were at. And maybe I'm right, maybe I'm wrong, but at some of these pod shops, they'll pay you 20%. You know, the firm charges its fee to the investors, which is usually 1 in 20 or 2 in 20 or something like that. Sometimes it's a little higher. Citadel has a very weird expense strategy, for example. And the idea is, let's say you're a great trader of Japanese technology stocks, right? And you're working at one of the 4 pod shops. Maybe you're working at Millennium, maybe you're working at Point72, maybe you're working at Balyasny, maybe you're working at Citadel, and you're managing $500 million. And you're doing really well. Every year you're up 30%. You're better than Burry. And every year, let's do the math. Let's call our Japanese trader, what should we call him? Ash. He's managing $500 million. He makes 30% return. So this is Citadel, or I'll just call it pod shop profits, right? And so now the pod shop has to decide how much to bonus this guy. So if they give him 20%, that's $30 million, right? Ash bonus. Or really, it's like Ash carry, P&L, whatever. And this is often held in some form of offshore entity. So these profits tend to carry forward without taxation, which is another kind of hedge fund secret. So the question for Ash is, should he leave or should he stay and start his own firm? So it depends on his profit share. So let's say his profit share is 15%. This may be a little more realistic. So his bonus is $22 million. So this is his AUM at Podshop. This is his annual return. 30% is very hard to do, by the way. Most of these guys are not doing 30% annual returns. They're doing like 10 or 15% returns. But last year Citadel made about 30-something%. So I think maybe some of that was a little leverage. Who knows? So anyway, it's still pretty good. Even if you make 15%, it's pretty good living. Having said that, you still have to pay off some of your teammates. Maybe that's I don't know, 1 or 2 million. So now, if you somehow get that in the U.S. tax structure, you're looking at all the way down to 4 million. So now, if you start your own fund, there's a lot of risk to doing this, right? First of all, if your skill is as a trader, not as running a business, you'd have to do a lot of marketing. Somebody's asking about Citadel shares sold yet not purchased. That's just a short sale. So a lot of people are confused by that. When you see shares sold but not yet purchased, that's just something that means that they've shorted a stock, which for a hedge fund is duh. That's what they do. So that shouldn't be something that makes any sense. Almond Nut is right about the Paulson trade working out better than anybody else's. So anyway, if you started your own fund, there's no guarantee you're going to manage the same amount. You might manage more. I've seen people leave a pod shop and they start out with 3 times what they were managing at the pod shop. And sometimes you start off with less because, again, maybe you don't hire the right people. Maybe you're not a marketing guru. You're a trader, right? And they don't know, like, if you're a new investor in this pod shop, call it Ash Capital, you don't know if that pod shop's going to do well. You don't know if Ash made all his money because he was working at one of those 4 pod shops, which I'll list over here. So there's no telling what kind of assets you're going to end up with. There's also the annual return. Well, this is sort of a problem at either place. I would argue that it's worse on your own than it is working at one of these places. One of these places might forgive you if you've been a good long-term winner, but your new investors probably won't forgive you. although you might be able to get a 3-year lockup or something like that. So assume your return's going to stay the same. Now, what's interesting is that at a hedge fund, at your own hedge fund, you are going to make, your profit share is going to be higher. You're going to have 20%. The problem is in here, where you might have higher team expenses. So you might have to eat like quite a bit, at least $5 million a year, possibly in expenses, and possibly as much as another, 20 or 30%. So you might end up making quite a bit less. You might end up making quite a bit more. You're making kind of like a big bet on yourself. Whereas at the pod shop, you're pretty comfortable, and you could focus on one thing, and one thing only, which is returns. But having your own hedge fund, it's a totally different ballgame. So that's kind of why some people stay at these pod shops and they don't go start their own firms. They could be worried that that's not going to be received well. They could be worried about a lot of different things. So at these pod shops, you'd be surprised at how many people have as good or better track records than someone like Burry. And there are several of those people on this list who left their pod shop. So anytime you see somebody who left a pod shop, that's typically somebody who had a very good track record. Now, interestingly, one of the people that left Point72 that had one of the best track records was Gabe Plotkin, who had the Melvin Capital. And Melvin Capital, unfortunately, had a bit of a disaster when it came to the GameStop short, which is well publicized and so forth, but it just goes to show you, just because you did well at one firm doesn't mean you would do well on your own. And again, I think that person is extremely talented, tremendous investor, but again, the kind of thing that could have been contained maybe at a bigger firm, but wasn't so contained within his own firm. So sometimes there's some really good value in staying at the bigger firm because you still have some really experienced colleagues that care about your success, whereas I think a lot of these, when you're on your own, nobody cares about your success other than you, your employees, and your limited partners, which will generally let you do whatever you want, whereas you're going to get a little bit of stress testing when you're at a bigger firm, I think. So could be helpful to stay at one of those bigger firms. Anyway, each company has its own culture and different environment as well. So, but Millennium has a particularly talented group of investors, I think. It's a very rigid firm in a lot of ways. And it's got a lot of rules. It's got a lot of kind of formulaic systems, but they still have an incredibly talented team of traders. And again, almost unknown basically, because in essence, it's a firm that prizes kind of secrecy and compliance, and kind of not, I think they'd be caught dead if they had a bunch of their traders talking about stuff on Twitter, right? Would I be Vivek's vice president? That's funny. I think he probably wants to pick somebody a little different from me. I agree with him on almost everything philosophically, but he's got a lot of better choices, I think. He needs somebody from the establishment. But man, what a trip that would be. Sam P. with the good question. All right, so here's D.E. Shaw, one of the most formidable quantitative firms, but they also have some fundamental investors there too. And again, some really talented people that, you'll never hear about, that have made way more money than Michael Burry or someone like that. D.E. Shaw, of course, is where Jeff Bezos, young Jeff Bezos, worked. And there's another guy who I've met, Michael Bigger, who, if you don't follow Bigger on Bigger Capital, he was at D.E. Shaw around the same time, at the same time as Jeff Bezos, and so he was an early investor in Amazon. Isn't that interesting? He's a very nice guy as well. I think he became the largest shareholder of Plug Power and Crocs and a bunch of. He doesn't have. I don't know that he has any outside capital. I don't remember. I haven't caught up with him in a very long time. But someone to follow. Let's see. Renaissance, of course, the most famous quantitative hedge fund of all time. 73 billion. Unclear how much real assets under management they have. They have sort of two funds. They have Medallion, and then they have Reef. They have some other smaller funds too, but that's mainly the sort of two big funds they have. And again, involved in every market in the world. These are just U.S. stocks, U.S. options. They're involved in every currency, every bond, everything. So, Two Sigma, another famous, becoming more and more famous quant fund. They're kind of doing things a little bit differently, I think, from a lot of these other shops. They're certainly doing their rapid fire trading, but I think they're also kind of doing a little bit more company building type stuff, which is kind of interesting. We'll see how they go with that. I think, it's an experiment. It could go well, it could go poorly, we don't know. Balyasny, a company that is truly transformed. This was and I mean no insult when I say this, this was not a top hedge fund for some years, and it has become one. And they should be very proud of their success. They built the company, I think, very slowly and methodically, and have built a really impressive company. You can see actually that they have moved from the number 8 spot here to the number 7 spot technically. Now this isn't an important metric because this is the SEC filing metric, which is definitely not what AUM is, and it's definitely not what, it's something that can often be inflated if you have a lot of options, for example. So I think Citadel has a lot of options, and their actual net amount, net of all options, maybe I should probably dedupe that. I wonder if that'd be fun if I just took out all the options using a Python script or something like that. And same thing with Jane Street, right? They don't have 200 billion in capital. They have 200 billion of notional exposure, perhaps. Perhaps. I'm not even sure that's right. But you know that Berkshire has all 300 billion of those assets. I think some of these other firms are actually pretty close to the right number, but anyway, that's one number to look at. Let's look at point 72, the very famous Stephen Cohen, sometimes called the Michael Jordan of trading, which I would echo that. He owns the New York Mets over here in New York. 29 billion in reported assets. They say going to work at point 72 is like going to play for the Yankees. It's one of the best firms you can go to play at. Of course, there's a lot more to the story, but we'll leave it there. Viking, maybe the most famous so-called tiger cub, out in Connecticut. I think the firm almost never had a down year, except for, I think, recently. They had maybe their first down year or something like that. Still a really formidable place, probably one of the best fundamental investors, period, right? So Berkshire Hathaway, of course, the best. Some of the people at the pod shops, definitely the best as well. But then I would put Viking maybe ahead of the pod shops in terms of their stock picking talent. Of course, each pod has its own quality, right? But Viking is definitely one of the best. And you can see the portfolio isn't thousands and thousands of stocks. It's a handful of stocks that you can look at and say, okay, I like that stock or I don't like that stock. So I'm going to paste the filing there. So if you look at their stock list, it's kind of an interesting place maybe to get some stock ideas from. It doesn't mean you should jump in and start looking at it. It's just or jump in and start buying it, God forbid, no. But there could be a list of stocks if you're looking for some new stocks to analyze. That's not the worst place to start if there's some stocks there that you don't know about. Viking, like I said, the best, or the biggest, I should say, tiger cub. Maybe not the best, but that's another story. But usually AUM follows the returns, and they've had very, very, very good returns under this guy Andreas's stewardship. Now, Bridgewater is probably the biggest hedge fund by AUM. And again, I'll maybe go in someday, talk about how you can look up AUM It's not exactly easy. I talked with somebody on Millennium's board of directors who said AUM is just a moving target. There are so many definitions of it. That actually played a part in my criminal trial case, and it was very difficult to explain and defend. But that's another story for another day. So this is just kind of equity exposure, and you can see that Bridgewater's $18 billion, but that makes sense because they're not really an equity shop, right? They're a macro shop. So they trade things like bonds and currencies and commodities, not things like stocks. So the fact that they have any equity exposure is surprising, and you can see they have just a tiny bit. Just the tiny bit they have makes them the 11th largest fund according to this metric, and this metric isn't perfect. So Baker Brothers, this is a fund that I know well. It's one of the premier biopharma investors. Two brothers, Julie and Felix Baker, done amazingly well. They are not a hedge fund, so they don't short as far as I know. I'm pretty sure that's right. And they still have $16 billion, and I think they still charge hedge fund fees. So to me, they belong on the hedge fund list, even if they're not a hedge fund proper. And so $16 billion in capital, all in biotech, and I don't think any of that is options. So you can see when we look at their list, it's kind of got an amazing concentration. And this is kind of what I think the average individual investor is really looking for, is just a handful of stocks. And you can see their list of stocks is maybe even shorter than Vikings. It's a really small list, and you can see it's a really chunky list. Like they have $250 million in this one stock, KGaA, which I've been short over the years, and I still think is a short. It hasn't worked out well for them, but they have $250 million or $750 million in $500 million, whatever, in Ascendis. And look at this, they have $2.5 billion in Beijing, and that's after I think they sold some. $2.5 billion in one stock. Is that their biggest stock? No, they have $3 billion in Insight. They were really early in Insight, so they'll hold stocks for 10 years if they have to or want to, and they're usually on the board of some of these stocks. They have $6 billion in Seagen, and it looks like they're about to sell the company to Pfizer. So Baker Brothers, $6 billion in Seagen, they practically run Seagen, and a lot of people don't get that. When you own that much of that stock, you're in control. If you want the CEO fired, he's fired. If you want somebody promoted, they're promoted. If you want somebody on the board, they're on the board. That's kind of the, basic way that happens. So you can see they have $6 billion in one stock, and look at all these little stocks they have. $5 million in this, $10 million in that, $20 million in that. I wouldn't even look at these stocks. Imagine running this fund. Like, these aren't interesting or important to you. The only ones you care about are maybe the ones over 100 million at least. So if you look at that, they really only have like 10, 15 stocks. So I think it's really interesting, right? Half their portfolio practically is in Seagen, and part of the reason it's in Seagen is because it's gone up so much, right? So it's total $15 billion. They are the biggest biopharma player, arguably by far. So let's leave that there. Now we're going to talk about a very controversial name, Tiger Global. So Tiger Global was kind of the restart, if you will, to some extent, not really, of Tiger. Julian Robertson, rest in peace, just passed away, one of the godfathers of hedge funds. So Tiger Global was called Tiger Tech a while back. And the fund manager, Chase Coleman, has had one of the best track records in hedge fund history until the last couple of years, where I guess the exposure, the beta, all of the stuff sort of came home, and the fund had a very bad year. And it's had a bit of a bad run, but I would never count Chase out. I think that they'll make a comeback, they'll be successful. They have been successful for so long. They'll make their comeback. They know software, they know tech better than anyone. I would definitely look at their portfolio for potential stocks to analyze. Not stocks to just buy, but stocks to analyze. Just because Tiger owns it or I own it or somebody else owns it doesn't make it a good stock. Half the stocks in this portfolio, or at least a quarter of them, maybe a third, maybe even half, will underperform. So keep that in mind. Just because somebody you like owns a stock doesn't mean shit. And I'm being
a little foul there for a reason. I really want to emphasize that. Why am I looking at this? Well, somebody asked me about Michael Burry, and I got off on this tangent about how there's at least 100 investors on Wall Street that are more interesting and more profitable than Burry. So, and I just want to point out a couple of places they work at, and then there's places that aren't on my hedge fund list, which you can find on my GitHub, github.com/Martin Shkreli/models. There's a lot of investors out there that you've never heard of. They don't file 13Fs at all. They're offshore. They don't handle U.S. money, or any money for that matter, of anybody else's. There's some under-the-radar quant funds. A really good example is, this is a really, really funny example. This was, and they tried to hide this quite a bit. And this article blew the cover off. This is the one good thing Bloomberg Media has ever done. It's called the $13 Billion Angels. And basically in 1997, these guys, somebody started donating millions and then billions of dollars to the Huntington's Disease Foundation. Nobody knew who it was. It was this crazy, really weird thing. And I even employed somebody who worked at the Huntington's Disease Initiative. It's called CHDI. And this fund is the fund that did it. This guy, David Gelbaum, is probably one of the most famous things in quantitative investing, and you've never heard of him. He's made way more money than Michael Burry. 10 times more money, 100 times more money probably. And you've never heard of this company, this firm. He doesn't have a Twitter account. In fact, they had no website whatsoever. And this guy donated billions of dollars to the Huntington's Disease Foundation, again, where I hired a very senior researcher from. And it's basically this quiet quant fund that just makes a fortune every year, very similar to Renaissance or something like that. And for whatever reason, the people just donate all their money. And some Bloomberg gumshoe reporter, we all know how spicy those Bloomberg reporters can be, this reporter found out, they wanted to know who's funding this Huntington's Disease Foundation. And unfortunately, this guy's generosity came back to not haunt him, but came back to de-anonymize him. So they were able to discover that it was these guys that made those donations. So those people, the Bloomberg people, were able to sort of like out this person who wanted to be private. They outed these people as the donors, and there's basically the largest donation ever made to a medical charity over the course of many, many years. So through that, they started pulling on the thread of, okay, well, who is TGS, and where does that come from? And they pulled out all these layers and entities, and they discovered who this firm was. So in any event, that's kind of what happened there. But the point is, there are people who have made better calls than Michael Burry, more profits, etc. And this is a global game, right? So there's people in Asia, in countries that you'd be very surprised, where there's some very good traders. So don't sleep on other investors. And again, if you're going to fanboy an investor, certainly be very careful. Don't follow what they do. Don't copy their portfolio with your own, blind picks of their portfolio. You can't see their whole portfolio, right? You can't see their shorts. You can't see their bonds. You can't see their oftentimes their swaps. You can't see their convertible bonds. Sometimes they don't report those. There's a lot of stuff you just can't see. You certainly can't see their shorts or their index instruments. So futures, for example. So if you had a fund that, I'll give you an example. You had a fund, this is Hot Shot Fund, let's call it SIMP Simp Asset Management. And you're following Simp's PM on Twitter. You see all his tweets. You really love Simp. And you become a Simp. And Simp Asset Management is your favorite hedge fund. And you go into their 13F. And you see they're long one stock, SIMP. And that's it. Their AUM is $5 billion, and they have $1 billion in Simp. What's wrong with this picture? You go into your Robinhood and you buy $10,000 of Simp. Well, I think you just made a big mistake. Why? Well, you don't know what the rest of Simp is all about. In fact, 13Fs don't require them to show all their positions, but they could very well be short. You don't see this. They're short $10 billion of SP, well, let's say they're short $10 billion of ES1. This is the E-mini future. Well, you don't have to report futures on 13Fs. So you don't know that they're actually just short the market with all their capital. And they're really good macro traders. So they're long Simp because, I don't know, the guy's brother works there or something. But they really think the market's going to collapse. So they're actually happy when Simp goes down. They want Simp and every other stock to go down. So when Simp goes down and your $10,000 becomes $3,000, and Simp is had the best year in its history, you feel kind of stupid. There's a really good guy on Instagram that sort of talks about that. So anyway, the point is, don't just trust these 13Fs. I mean, obviously the company is long the stock, but they could be sold out of it next week. You don't know. And it could be at a firm like this. Again, a lot of smart people at this company, but every office has an idiot, right? And it's not always obvious who that idiot is. And that could be the one stock that idiot really likes. Out of 10 traders at the company, one of them's bad, and they just don't know it yet. And they'll be fired next year or the year after. But in the meantime, they're going to lose a bunch of money in one of these stocks. Don't be the guy that buys the stock, and you don't know who at that firm. Not every stock at 0.72 is personally sanctioned by Steve Cohen. Not every stock at Citadel is personally sanctioned by Ken Griffin. In fact, almost none of them are. They're just betting on these bettors. And the bettors could be wrong or could be right. I know a guy that went to 0.72, and he was fired within 3 months for making bad bets. Could you imagine copying his trades in 0.72's filings? And then there's guys at 0.72 that are almost always right, but you can't tell from the 13F which is which. So 13Fs are a big waste of time, but I'm only pointing them out because, one, people are very interested in them, looking at things like this file, these league tables. This is one fund, Lone Pine, that I admired quite a lot, but it's kind of fallen from grace. It used to have the Midas touch. It used to never be wrong. And they've just had a very, I wouldn't say poor, but they haven't had performance like their old selves in a long time. And that's something that's really interesting, right? This was my favorite hedge fund for so long, and it's just kind of been kind of meh. These guys were in Google early. They were the best hedge funds ever. And it's just sort of not been that great. It hasn't been bad, but it's not been the legendary performance that they used to have. So again, just not a good idea to follow these too closely. If you're in the hedge fund game, it's a bit different, right? You know a lot of people at these firms, and you're interested in that for that reason. But if you're, just Joe Blow, this is a waste of time. Now, here I have listed 150 hedge funds. I haven't even gotten around to linking all the filings and sorting them and this and that. It's just not a good use of my time. But you can still get that file on my GitHub if you'd like. So let's get back to reality, maybe. BioNTech. A lot of interesting things happening here. Probably more interesting than Moderna, which I was saying a lot because Moderna's got some interesting things too. But the herpes vaccine is kind of interesting to me. The COVID stuff, I just don't understand. I don't think mRNA will be useful for cancer vaccines. But you can see there's a bunch of interesting, these are kind of memey ribomabs. These are RNA-encoded antibodies. Well, I'm not sure that's, you can always just give antibody, right? riboencoded cytokines or mRNA-encoded cytokines. So some of these are like pretty unique therapeutic modalities, but they're also like TLR7 has been used many times in cancer. It's just not worked over and over and over again. It's just not worked. There's this new bivalent vaccine, I guess they're selling, but Pfizer's really bullish on their ability to continue to sell COVID vaccine, which to me is, a little surprising given COVID's kind of disappearing. So again, I'm just looking for one or two numbers here. Oh, there's a, okay. And I got to get back to programming. Some of that stuff I can't stream. But if you're just tuning in, we're hanging out, talking about some hedge funds, talking about stocks. The one stock I really like is NTLA, Intilia. It's kind of like a mid-cap biotech stock. They're doing CRISPR, probably the only company doing CRISPR the right way, I would think. But got risk statements here. I don't think I'm going to get the right number from this. Some European companies don't update their shares outstanding every quarter. It's kind of a pain in the ass, but as long as they don't do an offering, then you know what their shares outstanding are. But there's other ways to get it or back into it, but I'm just going to leave it there, and I'm just going to update this real quick. So it looks like they have 13 billion in cash. That's in euros. And on debt side, 967. What's the latest BioNTech stock price? I don't even follow them on here, I don't think. Just pop it down here. $131. It's kind of been a bit of a dog. As it probably should be, given COVID's kind of dissipating. If you believe Pfizer's forecast, then it's a long, but I think anybody with half a brain would say that it's very unlikely COVID's just going to continue and continue and continue. So let's maybe look at some options for maybe what could happen in a couple different scenarios. Is there like the most bullish for these companies is like COVID becomes like a permanent feature of reality? I think that's probably unlikely. Geez, I really hope so. All right, so we should probably look at their Q1 results and then maybe 2020 as well. I feel like Bob Ross right now, like happy little quarters. All right, let's see, BioNTech. I thought it was really interesting, the acquisition they did of some like AI pharma company. I think AI and pharma don't really mix. Not that you can use AI for any data, right? Anything where you need to request data, you can use AI, and I certainly do myself. But it's a buzzword when it's applied that broadly. What specifically is quote unquote AI powered? That's the question. And I think using technology in pharmaceuticals is not something new. All right, let's see here. So their guidance for the full year was 13 to 17 billion. That's for 2022, and we know what Pfizer reported in Q4, right? So let's go to the commercial revenue. I really don't think they're going to be able to deploy the capital that they've generated effectively, and it seems like they're biting off way too much. Their R&D should be no different than it was prior to COVID. But my guess is that they're probably furiously expanding their deployment of capital in the hopes of kind of generating a hit. Although, let's see, we'll have to look at the R&D line. Maybe they're more disciplined than I think. But it's going to be very hard to keep up with that kind of return. I mean, that was maybe the most profitable project in the history of corporate projects. The COVID vaccine project is really rather incredible. And the fact that it's still that profitable even after giving half of it to Pfizer is really incredible. You can see they're paying full taxes now, which in Germany, I think you'd get a tax break, 27% tax rate, not too bad. I wonder if how they manage that, because they kind of get a check from Pfizer, don't they? Interesting. All right, so it looks like that's when revenue peaked, although we still need to grab that Q4 number. Q1. So you can see revenue has dropped, started dropping in Q2, but will it just disappear? Pfizer's guiding to COVID staying around forever. And while we were laughing about it earlier, I don't know that we should completely ignore it. Look at the sales and marketing line. I mean, if this isn't a meme, I don't know what is. BioNTech sales and marketing, 13 million. Revenue, 3.5 billion. Most companies have to sell and market their products. We don't. We let the media do it for us. I'm kidding about that. I'm not a COVID conspiracy theorist, but it is ironic, right, that the Democrats and media are maybe the outsourced marketing department for BioNTech and for Pfizer. Pfizer markets quite a bit for the product, so I'm being very unfair because that's what Pfizer's responsibility is. It's not BioNTech's responsibility, but it's still kind of funny. All right. I think I'm the only one laughing too. But anyway, here's, they've been paying taxes for a minute actually, which is interesting. Okay, a minute being the very defined period of time. All right, so let's get Q4 number, and then we could start doing some thinking about, well, what is the longevity of COVID? What is the curve going to be? I hate that term, flattening the curve, right? What's the curve for the future revenue going to be? Let's see here. Amazing, right? Commercial revenue, 24 million in 2019, 300 million in 2020. That makes sense. The vaccine wasn't ready until 2021, where it sold 19 billion. Whew. That's just half, right? That's just their half. Makes a farmer bro jealous. All right, so their peak quarter was Q1 22. Like this little U shape here. And really their first quarter was, it looks like Q4 20. It's when the vaccine, I remember the vaccine results came out. I was so shocked that an mRNA vaccine could deliver the antigenicity that it did, but happy it worked. Happy for humanity. I wish more people would have taken it, to be honest, but that's just me. And disappointed, but not surprised that you had some strain drift. Money printer went brr. Yeah, it's going to be interesting to see how they transition to commercial payers. Governments will say, well, you know, we don't pay for flu vaccines, so why are we paying for this? Although my guess is with Biden, you know, there's no bill that, I don't think he's met a bill yet that he doesn't want to pay for with the government money. Wonder why that is. There's a bill somewhere, hasn't been paid yet. Hold on, let me do this real quick. Entertain you guys. Some jokes. I heard there's a bill that hasn't been paid yet. Where is it? Hurry up, let me sign it.
I heard there's a bill that hasn't been paid yet. Where is it? Hurry up, let me sign it.
That's the nature of a lot of Democrats, unfortunately, in my opinion. That's what keeps the Democratic Party from being a good party. Otherwise, I might vote Democrat if it wasn't for that. What am I doing here? Oh, this is a rebate. Okay, got it. I think. Now I'm feeling like Biden. I'm confused as to what I even wrote in here. Let's see. Ah, I see what happened. Cool. Okay, so we are done with this part of the model, thankfully. So we only have like really 1 year of real results. And then we have this partial year, and I think for this partial year they said, was it 13 to 17 billion in commercial revenue? I think that was their guidance, right? Not that their guidance matters so much, but and then I think we have Pfizer's guidance as well, right? So we're trying to get a DCF going for BioNTech, which basically is completely dependent on Comirnaty. You know, the management team of BioNTech would not like to hear me say that, but that's what I think. Okay, so they said 16 to 17. It was 13 to 17, but now it's 16 to 17. So let's see, 16 to 17 billion euro Q3 22 guidance. Okay, so now I don't know what this came out. Let's look at Comirnaty for Pfizer. Okay, here we go. So you can see for Pfizer it did 38 billion. And they actually had a really good Q4. So BioNTech will probably have a really good Q4. I'm not sure. Well, you know what? We can see how well it's tracked, actually. Comirnaty. Pfizer, we could do an R squared. Let's see. So let's see what the R squared is. Equals core L. Function you'll never need to use in Excel. All right, there's a 93.93 correlation coefficient. So you can actually take the imputed value right off the bat. But you can see let's see, percentage of Comirnaty. I think there's like a sell-in delay effect or something. Let's see. Okay, so they get on average 50% of Comirnaty. So maybe 40 something percent, I think. 54%, okay. So I'll just leave that there. Because the biggest question is really what will happen to 2023. I don't think it matters that much, kind of what happens in Q4. I just need a number to do over here. And so now we need kind of a curve. Let me take a look at what I did for Pfizer. So for Pfizer, I have it dropping 50% for 2024, stabilizing for a year, and then dropping off a cliff again. So that's what it looks like. So if you look at that, and you just take the NPV of that alone, without regards to cost, although we can pop in cost really quickly, right? Because we know what their average gross margin has been. It's been 4x. I feel bad for anybody who trades 4x. I mean, I think that, you have to be a really good macro analyst, but that's not my jam. All right. So Comirnaty gross margin was, I don't know, let's see, 83%. Looks like it descaled a little bit into the high 70s. Let me put it at 80%. My jam is equities, fundamental equities. All right, so this is, yeah, they have very little costs. So I'm just gonna put like 300 million in cost here until now remember, they are paying taxes, as I pointed out earlier. And that was around 25% tax rate. We should all be so lucky, right? All right, so if you just take the NPV of this, it's gonna be pretty low discount rate. That's 12 billion. So they have 19 billion in enterprise value. So basically the market thinks that either the pipeline will have some value that's worth a mix of that 12 billion here plus say 7 billion in the pipeline. Maybe it's their influenza vaccine, maybe it's their cancer vaccines, whatever it is. 7 billion is not a small amount for a biotech company to have unaccounted value for. The other option is people think that, or the market thinks, I say people, I just use that shorthand sometimes. The market thinks Pfizer's a little bit more right than I do, and that we're going to have a slower decline of COVID, at least for COVID revenue, than we think, that companies or countries may stockpile. For example, stockpile COVID vaccines, in which case now you're talking about, I just changed it from a 50% decline to a 40% decline, in which case now you're talking about 15 billion. So there's only 4 billion in unaccounted value. I'm looking at the enterprise value. If I drop that even a little bit more, you're talking about the company potentially being along. If COVID's downward spiral happens less slowly, then it's possible the company is actually a long and not a short, or that one of these pipeline products is really valuable, which we may give them the benefit of the doubt for. So there's only a 30% decline in COVID, the stock would be actually long. So I'm assuming that there's kind of like this very rapid decline and COVID goes away. Part of that might be my own mental, how should I put it, like my own psychological kind of bias at play, where I'd like to see that happen, right? I think we'd all like to see COVID go away as rapidly as possible. So that may not be the case. I don't know if Pfizer's right and COVID's going to come back with a vengeance or not. I really don't know. But I think, obviously, your NPV of the company's assets plus the company's cash, right, should be greater than either the market cap or the enterprise value, depending on how you count it. So I can just add the cash, and I'll get kind of like an expected market value, which will give me an expected stock price. And you can see from my calculations, the expected stock price would be 138, which is about 131, which is the current price. But that's a contrived finding. My unaffected estimate was that COVID revenue will drop 50%, and then we'll stay with only a 10% drop, and then again drop 50% until it just sort of disappears. In that case, BioNTech is not a long, but a short. But I'm also assuming that there's no value at all in their pipeline, and that they're going to burn capital with their pipeline. In fact, that would make it even more of a short if I'm right about that. I kind of take no position. I just say the pipeline isn't valuable at all. I'm not including it as a detriment, or I'm not including it as an asset either. And if I'm wrong, even a little bit, and they come up with another vaccine, like say for herpes, that looked really interesting. If there's a herpes vaccine that works, BioNTech would go up quite a lot. So that's just sort of the way I would look at BioNTech. It's a very complex situation given. It's funny how it becomes more complex the more simple it is in a way, because they only have one product, but depending on how that product goes, we could see an array of outcomes. It's kind of less the case in more diversified companies where it's kind of this like aggregate expectation. And in this case, the market sort of has it balanced, I think, relatively correctly. They do have to declare every drug in their pipeline. It's not, there's not one specific law I can point to or something like that, but it's generally kind of what's done. It's a good question. And you can just sort of see what those drugs are on clinicaltrials.gov. So, or any other competitor to clinicaltrials.gov. It's not such a good website. Needs an upgrade pretty bad. All right, next we'll look at GSK, which is GlaxoSmithKline, the pride of London, second biggest drug company in London. AstraZeneca is number one. Has actually beaten the crap out of GSK. It used to be smaller than GSK. GSK has kind of stood still or shrank, while AstraZeneca's run circles around them. That's the power of good management. So we'll do that at a later time. And then we'll look at Amgen and Sanofi. So there's a lot of time left to do that. So with that being said, I think I'm going to take a break. Maybe I'll play one quick game of chess. And I'll do some programming. I might play some Grand Theft Auto later on, so make sure you guys tune in later tonight. I know a lot of you guys like to watch me during market hours, but I do stuff outside of market hours too. I'm trying to get to 2,000 in lead chess, but I've got some ways to go. I've kind of stuck on this plateau at around 1,800. But this is the highest chess rating I've ever been. Oh, I've never seen this move, C2. It's kind of a weird move. Obviously I have to take it, but it's a bit weird. It's not a good move, I might add. You could just take on B2. It kind of frustrates the development a little bit, but okay, that's bad too. That's really passive. I'm almost wondering if I could take on F7 right now, but I'll play it cool for now. Because the other problem with H6 is even though it retards the movement of my knight to G5, there's really no way for his knight to come out to H6 and defend F7. This is a bit of a fucked situation, as a master chess player might say. I think he's fucked, at least. I could be wrong. Queen has to come defend it now. Good on him for realizing that. Let's see. He's got a lot of trouble here in development. His queen's on f6, which isn't great. Poor Tim. The only question is, can I capitalize and ensure the victory, which is not so easy sometimes. You can be in a good position, and it doesn't always mean that you're gonna actually win. Let's see. Yeah, I guess, there's nothing wrong with this, right? I don't know how he's going to defend c7. Can he defend c7? GG. He has to move the king. He could kind of counterattack with knight a5, but I still might take on c7. The other problem with knight a5 is queen a4. I'm up 30 seconds on time. Oh, he did it! Okay. The bastard did it. Alright. Oh, man, I gotta find the win here. I love this pin situation potentially setting up on the d file. I kind of think rook d1 is almost neat. I don't feel so great about the taking on c7. I'll play rook d1. I sometimes love it. Love it and I hate it when I'm in this situation where the opponent's twisting in the wind and it's like they have their king exposed like this, but I still don't know quite the right way to finish them. Okay, I have a free pawn here on f7, but I think I'm going for a lot more than that. Although it doesn't hurt to take it. I almost feel like it can take even on d6. No. And he's doing a pretty good job of stopping the e5 advance, so I think I'm just going to do that for now. It looks pretty nasty. I'm not sure what the practical effect is. And then maybe okay, we have a move. Okay, I think he's screwed now. Knight takes. Okay, so my bishop's being threatened, but I think he's got a world of other problems. I don't know. I can kind of withdraw or retreat here, but a pin could be coming here. So I don't even know where I can retreat to that's safe. You know what? I almost want to dare him to take there. I don't want to lose my light squared bishop, but I also think I still have a lot of initiative. He's actually kind of surviving okay here. I need to find a good place for my bishop. Okay, I don't know what he's doing here. He's targeting this pawn? I'm not sure what that'll get him. I almost feel like I should... What do you think? Sack takes... 2 minutes. 2 minutes, Shkreli. 2 minutes, you're on. I move, he takes. I take, he takes. I'm gonna sack that e4 pawn. You can have it. Fuck rap, you can have it back. This should open up the center quite a bit, but after queen takes, bishop takes, queen takes, I mean, the best I've got is rook back to e1, which feels like I should have something better than that. Oh, I see. So after rook e1, the file's open. So he's kind of helping me by vacating the e file with my pawn. Sometimes you want to throw pawns away in chess. That is interesting. This is kind of a desperate move. I'm not sure what he's going to get at there, but with the pawn hanging here... Oh, okay, so this is just a hanging bishop. So if he takes here, there's sort of an undefended... There's a fork here. There are two undefended bishops. It's not even going to do that. Sad. Okay, this is GG. I just need to get all my ducks in a row. How about that? Okay, now the pressure should be more or less unbearable. Kind of has to move the knight, or the knight hangs. But I'm down 30 seconds now in time. E4 is hanging. He can take and protect there. That's what he chooses to do. This gets very dicey for him, though. He could take the bishop. Let me see here. Takes. Oh man, let me think. Shit. Okay. Oh, you know what was nice? Rook d4. I missed rook d4. Rook d4 is kind of brutal. Okay. No problem. I just take here, right? 51 seconds. Okay, he should just resign. Stop disrespecting me. That's disrespect. I got into so many fights in prison over chess. You guys wouldn't believe it. I can't tell half those stories. Okay, yeah, okay, that's your move? That's your fucking move? Come on, man. Come on, man. Oh, whoa, I fucked up. Shit. I fucked up big time. Okay. Yikes. Yikes. Oh man, that was an easy win too. It's a ball game. Fuck. In fact, he's winning now. It's the thing about blitz, right? Okay, come on. There should be something here for me. God damn it. All goes to shit. Free queen. All right. Oh well, no 1800 for me. Thanks for watching, everyone. I'll catch you soon.